All right, welcome back everyone to another episode of Wall Street Rundown. Hey, the markets are closed, the numbers are in, and now it's time to break down what really moved the street today. My name is Billy. I got Wale with me. What's good, Wale?
What's good, everybody?
Hey man, it is Wednesday, May 13th. Man, the stock reacted to the fresh economic data that we got. Investors did something unusual that is if you're looking at the numbers, we talk a little bit about it after this, but it should have went the other way, but instead it went a completely different way. I mean, that's for me, that's like that is the most craziest thing I've seen in a long time, except for the move that we got after Liberation Day. I mean, this is probably up there with it. You know what I mean? So today we'll cover some of the biggest movers, what actually moved the stock today, and highlight some of those field that that kind of drive the market up today. So let's dive in, man. Wale, like I am like I know we talked a little bit about this, but I'm kind of shocked, man. Like CPI numbers came in high as hell. Inflation is not cooling down. So we've seen a couple of maybe like the market kind of dipped between yesterday and today. The market dipped a little bit, but we came back and you go look at S&P, go look at Apple. Apple created an all-time high today. Like that is crazy. You know what I mean? So again, something is driving the market. If you're looking in the right place, you might be able to find the right play, right? Not everything in this market is moving, but something is driving the market, and certain stocks are participating at a crazy, crazy level. So let's talk a little bit about that, man. Break down the numbers for us, and let's kind of give the people a little bit of understanding. And also the yields. I know you sent me that screenshot. The yields. I mean, that's something that's, we need to start putting some attention to it too. So yeah, let's talk about that, man.
Yeah, so very odd last two trading days because if you take economics and you sort of are a macro viewer of the markets, you kind of look at things from the top down. You're not supposed to be hitting all-time highs with hotter than expected CPI data,
Says
right?
who?
Right? Exactly. It reminds me of like the Batman and Robin meme where it's kind of like
Mm.
Robin is saying something and then Batman is like slapping him.
Yeah.
It's like economists saying yields are all-time high. Shut up.
Shut up.
So, a couple things that don't make sense, right? We saw yields move to some of their highest points since I want to say July 2025. I
Ridiculous.
think the 2 year is at 4%. The 30 year, I think, is above 5%. So yields are moving higher, but stocks are also moving higher. And then another thing is that the PPI data today, year over year, is 6%. 6%. CPI came in hotter than expected yesterday. Market sold off in the early part of the day, ended up recovering. So, me looking at how everything is just sort of moving, I was like, okay, maybe the market found its kryptonite. And I typed it in the investment group today, and boy, was I wrong. I was completely wrong. So this is my take on what is happening with the market. And I think we talked about this offline was the market is looking at the economy in two segments. And I think we've talked about this over the last couple of months, B2B and B2C. The market has decided that if you are a B2C company, your clients are consumers. We don't want nothing to do with you because the market has now decided that the inflation story is a consumer problem.
Consumer problem, exactly.
It's a consumer problem. Why do I say that? As a consumer, if gas goes up, if food goes up, if grocery goes up, that hurts my budget because my income is not moving along with those products.
Yep.
It's just not, right? If gas went up $1, if I'm an hourly wage earner, I can't go to my employer like, yo, I need $1 raise to keep up with inflation. That's not happening. So the market is saying this energy supply shock, this inflation supply shock that we're seeing with whatever other product is a consumer problem. But on the B2B side, if these companies have higher input costs, let's say travel logistics or deliveries are going up, guess what? These companies can just raise prices because what they're selling is in demand.
Yep.
So if you are a chip maker and let's say your shipping cost or your whatever goes into the build out of your final product goes up, the demand is so high that if you raise your prices, no one is gonna jump away and say, I'm not buying no more. So having that pricing power and having businesses be your main revenue driver or your 100% revenue driver is other businesses, then the market is like, well, that's where we're going to be investing and
That's what
putting
I'm
the
gonna be
money
in.
in.
Yeah.
Let me give you some data that somewhat supports this theory. So I'm going to go through just a bunch of retail names that I have on my watch list just to give you a picture of what I'm trying to show you. And this is over the last 3 months. 16 retail names in my watch list that I've looked at. This is 3 month data for the stocks. Under Armour, down 28%. Target is only up 6.82% in the last 3 months. Costco, only up 2.7% in the last 3 months. Walmart, down 1.47% in the last 3 months. Nike, down 31%. Macy's, down 15%. Gap, down 22%. Capri Holding, down 16%. Abercrombie and Fitch, down 22%. Dick's Sporting Goods, up 7.3%. American Eagle, down 38%. TJ Maxx, down 4.82%. Best Buy, down 13.96%. Signet Jewelers, down 13.59%. Lululemon, down 29%. Kohl's, down 35%. So you see that all of these companies that I just listed are B2C direct. Everybody was either flat or down. I
Yeah.
think there's another one I want to look at. I think I forgot to put this on my list. Levi Strauss, only up or down 1.93%. Let me give you another sector of the market that basically is B2B, I mean B2C. This is the travel names. Some of them have done fairly well, but let me give you a couple names. Royal Caribbean is down 19.49%. TripAdvisor is down 7.19%. MGM Resorts is only up 10% over the last 3 months, surprisingly. Uh, Carnival Cruise is down 21%. Alaska Airlines is down 30.81%. Norwegian Cruise Lines down 26%. American Airlines is down 9.5%. United Airlines down 12%. Delta is flat, up 1.68%. Southwest is down 22.87%. JetBlue is down 17%. Las Vegas Sands down 8.96%. Wynn Resorts set down 7.64%. Expedia flat, up 3%. Booking Holdings basically flat, down 6.71% over the last 3 months.
Crazy.
So all of these consumer concentrated businesses are either flat or down. And I gave you cruises, airlines, bookings. When we looked at retail, we looked at jewelers, we looked at clothes, we looked at, Lululemon, we looked at shoes. Most of that sector of the market has done absolutely nothing. And it makes sense to me because, again, to me, the consumer is not as I think what do we get consumer spending tomorrow? I think
Yep.
before the market opens. I think the consumer spending story is being hidden behind higher credit card balances and defaults. I think that's the name of the game. Like the consumer is spending, but they're spending more than what they have. So until the market cares about that information, I mean, I don't see what's going to stop this market. Uh, the only thing that I know will stop this market dead in its tracks is a rate hike. That I know will stop the
That's crazy.
market dead in its tracks, but we don't know if that's what we're going to get over the next couple of months or not. But right now, that's my explanation. It's
That's
B2B,
crazy.
it's B2B over B2C, man. That's what it is.
So basically, when it comes to consumers, we're not shopping, we're not traveling as much, we're not vacationing as much, basically, right? And on top of that, we talk about like I'm looking at some of the numbers for credit card delinquencies in early 2026. It reached levels not even seen since the 2008 financial crisis, with 8.6% of credit card balance transitioning into early delinquency, while total balance saw a seasonal dip to 1.25 trillion in Q1 in 2026. I mean, the delinquency rate is high,
Mhm.
and average credit card debt per consumer grew to roughly $6,715 by the end of 2025. So that's it. Bottom line is a lot of people owe a lot of money. You know what I
And,
mean?
and you know who owes even more money? It's the United States of
Yeah, the
America.
US. But they'll come after you for your money.
The United States of America's interest payments annually is now more than the defense budget.
That is crazy.
So that's another thing that to me in the background, like I can hear the music turning, but it's being ignored. So I mean, like, what do I know, man? I'm not saying that the market should crash 23% or 30%. I'm not saying that, but the speed at which everything is moving, while some of the stuff that shouldn't matter is being ignored, I think you got to take everything with a grain of salt. And as an investor, you have to, again, you got to realize as fast as it got here, it can come down just as fast. You
That's
know,
as fast.
stocks take the elevator. I mean, they take the stairs up and they take the elevator down.
Like real quick.
Yeah. So you gotta be able to gotta be prepared for both sides.
No, that's for me. That's a little wild, man. The fact that we are seeing these numbers, especially when it comes to like the um the credit the inflation numbers that came out this week. I mean, 6% year over year in April. I mean, like, and no, and we didn't hear anybody budge about it, which is for me, that's the crazy thing, you know. The 30-year yield crossed 5% for the first time since 2007, while the 10-year treasury yield hovered near 4.48%. Like, guys, like every indicator is saying we should not be seeing this market high. Like everything is pointing to like what, like the complete opposite, basically,
Hmm.
you know? So I don't know, man. I don't know what's gonna bring this market down, but the other thing I want to talk about is the Fed transitioning leadership to Kevin Warsh this Friday. So we're gonna get a brand new Fed this Friday. Now, is he gonna give us a conference this Friday? Is he gonna talk to people? We don't know because he is definitely has a different style than Jerome Powell. So there's definitely gonna be kind of we talked about it last week. There's gonna be some internal division regarding which way the future rate should looks like. Some people saying they should be dropping, some people say it should stay the same. There might be a few people that saying it should go up. If you look at Kalashi or one of your the betting sites, 34% of people now saying that we're gonna get a rate hike. You know what I mean? And like we talked about, if we get a rate hike, yeah.
I mean, I'll say this. Number one, if you're talking about cutting rates in this environment, I would drug test you. I would seriously drug test you.
But
And it,
but but you see what's been happening though. We've been saying the opposite, and then the opposite is happening. So you never know.
I don't
The
know.
common sense thing is keep it the same, or hopefully not raise it. But
If
yeah.
if we, a rate hike to me would so there's a couple things that I feel would really ruffle the market. Number one, I think number one, a rate hike will ruffle the market.
Mhm.
Number two, I don't know how bad it would get, but if the U.S. debt gets downgraded from Moody's and Standards and Poor's, I think that will also ruffle the market. And then if the private credit story starts to unfold into a disastrous story, and that starts to leak into other areas of the market, like financials, like the big names. Like if we look at the private credit story, a lot of the big names aren't really phased. So the J.P. Morgans, the Bank of Americas, the Wells Fargos, the big banks, none of them have really been taking any the Black Rocks. They've taken their lumps here and there, but nothing catastrophic. If that starts to really crack, I think that's another thing that we have to be worried about. But until then, hey man, you just gotta keep riding the gravy train, I guess. So I can't I can't sit here and confidently say that this is a justified move that we're seeing. But I looked at bond yields today, and the jumps that we're seeing on a day-to-day basis when I'm looking at spreads getting a little bit bigger. So I told people in my group, I think we're getting to an area to a point where it might start making sense to hedge. With the 30 year at 5% now, and the is it the 30 year or the 10 years at 5%?
The
Might be the 10 year.
the 10 year. The 10
Yeah.
years at
So
5%.
10 years at 5%. Haven't seen that since they said 2007.
Mm-hmm.
And then you got the 2 year at 4.
Yep.
So yeah, I'll see what happens with bond spreads when we wake up tomorrow in the morning. But we start getting to levels that make me nervous, and I start taking some money off the table. But
Yeah. So the 30 year just crossed 5%, and then the 10 year is sitting at 4.48%. So
oh, so the 10 years for 4 point.
four
Okay,
eight.
so
Yep.
the 30 years at 5%. Okay.
Yep. Yep.
Okay. Yeah. Okay. So
Yeah. I think honestly long term, it might be good to start hedging positions. Short term, I don't know when we're gonna get that. Like you don't know when that's gonna happen. That's the thing. This market can stay this euphoric for a long time, even though all indicators are showing like it should go the other way. So you just never
and I,
know.
and I'll say this, if you're an investor and you are in some of these names that have been up over 100, 200, 300, 400% in the last year, at the very least, take out what you put in.
Yep.
At the very least.
Yep.
At the very least. So if you put in 5 grand into a position, that position is now 15 grand.
Yep.
Take out your 5 grand because this probably won't happen, but let's just assume it goes to zero. You're at break even. You haven't taken a loss.
Right.
Another thing you can also do is raise your stop limit.
Yep.
So what I've been doing with Intel is after every big move, I just start raising my stop to sell a little bit more of, how it's moved. Do I plan to completely get out of the position? Probably not, but I feel like you got to take some profit along the way. Gots to.
You have to.
You've been in SanDisk, you've been in, Micron, all these big AI names. If you've been inside of some of these names, take some
Take some
money
money.
off the table.
Take some money.
Because what you don't want to do is start panic selling when something happened. You wake up one day and the whole world's falling apart. Let's just assume, kind of like Liberation Day, right? And the whole world is falling apart, and you're like, "Oh my God, what should I do?" No, you planned for this, right? Took some money off the table, and you move on. So that's just my suggestion. If you and some of these high flyers right now, just don't be stupid.
Yeah. Make sure you book some profit. Make sure you book some profit. Well, speaking of high flyers, I mean Donald Trump just landed in Beijing, China. And you guys would never guess who is there with him. He took about 17 top CEOs, mostly representing technology, finance, and industrial sector. So let me read you guys some of those names, man. You got Jensen Huang of NVIDIA, Tim Cook of Apple. Pay attention to these companies because they're gonna go to China. They're not going there to be, buddy buddy. They're going there to get some business. You know what I mean? They're going there for a reason. With the president too. Come on. You got Sanjay Mehrotra, I think, from Micron Technology, Cristiano Amon from Qualcomm, Dina Paul McCormick from Meta, Jim Anderson from Coherent, Larry Fink from BlackRock, Steven Shoresman from Blackstone, David Solomon from Goldman Sachs, Jane Fraser from Citigroup, Michael Maybach from MasterCard, Ryan McClerney from Visa, Elon Musk, Tesla, Kelly Ortberg from Boeing, Larry Kopp from GE Aerospace, Jacob Tyson from Illumina, and then Brian Sykes from Cargill. So those companies are all the CEOs. They didn't even send representatives. They send their it's CEOs to China. I'm kind of surprised Elon is in China, honestly. Like they're your biggest competitors. I don't know what kind of business he's going to get with them, but nevertheless, we shall see. Maybe he'll come up with a deal with them. I don't know. But these companies, you guys should really pay attention to them over the next 12 months to see exactly what kind of deal they're gonna get. So again, man, this is gonna be very, very interesting. Some of those companies are the same companies that had a White House dinner. I mean, remember a lot of those names actually were in the White House dinner with President Trump earlier when he first started taking the presidency. So let's talk a little bit about that, man, because this is for me, this was very, very interesting.
Yeah, I think the play here, if I were to guess, is rare earth metals. I think that's the thing
Mm,
that's what they all got. You need those rare earth metals for iPhones. You need them for semiconductors. You need them for
right.
China has the rare earth metal business in a stranglehold, like Bing Rames had Jody in a stranglehold in Baby Boy. That's their game.
That's crazy.
And I really feel that some of these companies need to be buddy buddy with China, and they need Donald Trump to also be on board. Nvidia has found ways to still march to all-time highs. Can you believe that Nvidia is worth over $5.5 trillion now?
Mm,
I mean, I was just looking at the list of all the trillion-dollar companies we have now. I mean, Nvidia is like 5 trillion. You got Google like 4. I think Broadcom just crossed 2 trillion. TSMC is now 2 trillion. So all of these companies, to me, the silver lining is rare earth metals.
that's
And
crazy.
because everybody needs those, I mean, you need them for EVs too. You know
Mm-hmm.
what? Um, Elon needs them for EVs. So if you're able to go into China and kind of talk, do your sales pitch in China in person, you jump on that opportunity. So that to me is what it's about. I want to say Trump said something about Boeing in China, like they're taking off they're extending the tariff truce or something like that. I think I saw a headline on that earlier this year. But yeah, this is something you have never seen this before, ever.
This is crazy. This is
So
crazy.
and
He's
you got
really treated this as a business trip, man. It's not no joke.
and
So
I think if you look at how he just runs everything, he looks at everything from a business perspective. I think
mhm.
that's what he I mean, I'm not saying he's doing a good or a bad job, but it's just one of those things. I think he looks at everything from a business angle.
It's a deal, yeah.
Yeah, so but yeah, we'll see what comes of it though. I saw some people buying a bunch of Apple calls today, and I was like, man, are they about to strike a deal or something?
I don't know, man, but I swung Apple from a couple of days ago, got about 80, 100%, somewhere around there, and I was like, I'm out.
Oh yeah.
It's because you never know. if they
Yeah,
if they shoot, if they shoot to the moon tomorrow, oh well. But yeah,
yeah. If you got into Apple after that earnings boost, you were sitting pretty right now because that thing went from like 275 to 300. Yeah. So,
it's ridiculous, man. But again, for me, this was like a interesting moment that we see all these top CEOs in China. You know what I mean? So it's gonna be interesting to see what happens over the next few months. What deals gonna come from there? What if they can convince. I mean, although they might be there for um rare earth metal, but they're also there for selfish reasons. And if every single one of them want to grow their company, so of
oh
course
yeah.
they're gonna probably try to make some side deals also with there. So
Yeah, so because I know Tesla sells in China, Apple sells in China, so Nike CEO should have showed up and tried to save the stock.
bro, but he wouldn't have got invited anyway.
I guess somebody told me Nike hit a 12-year low.
Yeah,
They about to break that $40 mark pretty soon.
they're going to. They're
Yeah.
going to that until they figure out what they can do to turn this company around. I don't see them. I don't see them coming back yet.
I mean, the market has been on a historic run, and if you just go look at Nike stock, it is just
Completely opposite.
completely opposite. Kind of reminds you of the SpongeBob meme where Mr. Krabs is looking out the window, and SpongeBob and Squidward got their
Yeah.
hands up. Nike just looking like
Oh my God. This
so.
is this is this is horrible for the company though, man. Like
Yeah,
they need to figure something ASAP. Otherwise, Yeah, they just broke through the 2015 low. The next low is going to take the 2014 low. That's crazy. Yeah, that's
Yeah.
ridiculous, man.
Nike get under 40, I might take a flyer on it. Just close
Yeah.
my eyes and just say
Uh,
and pray.
but again, like a 2028 contracts, or if you just get the stocks,
Yeah,
they'll come back, but it's just like it's gonna take a miracle at this point.
I agree.
At this point. But let's move on to one of the IPOs that you were talking about, Cerebra System. It's a Sunnyvale, California-based AI hardware company known for developing the world's largest and fastest AI processor, WSE, which stands for Wafer Scale Engine. They were founded in 2015. The company aimed to disrupt the AI infrastructure market dominated by the GPU manufacturers like NVIDIA by offering superior speed and efficiency for AI inference and training. That word keep coming up. Inference keep coming up. You know what I mean? So they are planning to IPO. I don't know. Did they say in 2026? Of what? They already IPO today at
No,
$185 per share. Or
the
oh,
the
this is a
price
public offering. Okay.
yeah, the pricing is was set. I think the pricing was set today, and then they'll start trading tomorrow.
Okay. So
Yeah.
again, let's talk a little bit about that, man. Their ticker symbol is going to be CBRS. They'll begin trading tomorrow, May 14th, 2026. Shares sold 30 million Class A shares, upside from initial plan of 28 million shares. So Morgan Stanley is the underwriter. Okay, I see.
Ooh,
Citigroup
yeah.
also, Barclay and UBS hold a 30-day option to buy additional 4.5 million shares.
Ooh.
That is crazy.
Yeah. So Cerebras is another chip maker, um, but their chips are very different than the traditional NVIDIA GPUs that, people are used to seeing. And I think under what I kind of figured out from what I read, I'm not a techie, so if anybody knows about this stuff, please correct me. I think they built the memory on the chip. I think that that's one of the biggest differences. So their main business, as you mentioned, is wafer scale engine WSE chips, C3 AI system supercomputers, and they also have cloud and open inference and training structures. So they're an alternative to your traditional GPU clusters for large AI workloads. And they're in the same space as NVIDIA, AMD, and Google TPUs and Grok. The way I'm kind of looking at the chip industry now, it's like the car industry, right? Like they all kind of do the same thing, but it's kind of like, what do you really need it for, and can you afford the product?
Correct.
So it's kind of like Nvidia would be like the Lamborghinis and the Bentleys. Then maybe Cerebras is like the Mercedes and the BMWs. Then, AMD would be like your Lexus and your Infinity. And then the TPU would be like your luxury fully loaded like Toyota Camry or your Mercedes C-Class or something. I don't know. Just they all kind of do the same thing, but everybody can't. This is how I look at it. I'm pretty sure everybody doesn't have the budget to pay for NVIDIA chips, right? Just like everybody doesn't have the budget to pay for a Lamborghini or a Bentley. So they kind of look at,
Right.
okay, what can we use to get this training and inference done? Do we go to AMD? Do we go to Google TPUs? Do we go to, someone else? And now we've got another competitor in the space that has the ability to do what a lot of people are looking for. They're looking for compute, they're looking for inference, they're looking for training, they're looking for something that can handle large data sets. So we'll see how this plays out. I've been seeing stuff on X, people calling this the NVIDIA killer. I wouldn't
Hmm.
go that I
Hmm.
wouldn't go that far,
Oh no.
but NVIDIA does have competition in this space now. And I don't know what their pricing power is. Um, the one thing that I did notice in their S1 is for a semiconductor company, their margins are not as high as some of these other names. I think their margins are only about 40%. So I don't know if that will improve with time, with scale. We'll have to wait and see. But if the IPO price is set at 185, I am almost certain this thing is going to open around like near 300 when it starts trading um, on the exchanges tomorrow. I am almost certain this thing will start trading near 300. So um, I would recommend everybody do their own due diligence. If you want to pay a premium for it, hey,
Hmm. Go ahead.
go ahead. I will not be buying. And I could be wrong, you know, because sometimes IPOs pop real big and then they fizzle out and then they pop again. Like CoreWeave, right? CoreWeave ended up losing the first couple, going down first couple of days, and then eventually like clawed its way back. I think it got to like 300. I'm like, let me see, where's CoreWeave's chart real quick? Because I will never forget that. I wanted to see CoreWeave under 30, and I was like, if CoreWeave gets under 30, I'm a buy. And it never got under 30. I think the lowest it got was like 33 and some change. Yep, 33.52. And that thing went all the way to 187. I missed that run. So it ended up trading below the IPO price. And then sometimes you have names like Figma that IPO'd. I don't know what the IPO price was, but that thing shot up to like 142 in the first 2 months. That stock is $16.
Yeah. Because
So,
people, whoever, like, people got to remember too, is like, there's people who have like their money tied up on those companies, right? So it's like, as soon as they get that period for them to sell and get their, basically get their profit out, especially if you invest in a company for like over 10, 20 years, and the IPO is the only time you can actually like take some profit and be able to like,
or
book your investment.
after the lockups, yeah,
Yeah, yeah. So once that period comes, a lot of people actually do exercise and take the money out because
I don't blame them.
yeah,
Yeah.
you've been sitting on that money for years. So
Yeah, employees, early investors, like, if you now I will say Figma has gotten clapped because of Anthropic, because it's a software company. So all the Anthropic news has hurt Figma. Um, but just know that if you're investing in an IPO on day one, it can go either way. So just do your research, do your due diligence, know what you're getting into. And if it drops and you believe in the company, be prepared to buy more at a cheaper price. So that would be my advice. Sometimes Facebook was another one that at IPO'd, it dipped below the IPO price within the first couple of trading months.
yep, yep.
So, just because it drops below the IPO price, it's not always a bad thing.
Right, right,
It's not
right.
always a bad thing, but just make sure you understand the company. Um, and if you don't understand the company and you just buying it because you just want to be in it, that's probably not the best way to that's not the best approach to take when it comes to IPOs, in my opinion.
That's
Because I've
crazy.
I've done it before.
Yeah, yeah. The other thing I was gonna say is like, speaking of like Nvidia killer, Nvidia actually is like, I've been seeing some posts on X about some companies like some research company shorting Nvidia. So Copper Research disclosed a short position against Nvidia, alleging the company still delivers significant revenue from China despite U.S. trade restrictions. So they're saying that Nvidia exposure to China is actually a lot bigger than what we think it is.
Hmm.
So the firm claims more than 20% of Nvidia's fiscal year 2026 compute revenue is tied to China through alleged GPU diversion and Southeast Asian intermediaries. So it looks like Nvidia might still be selling chips to China, but just going around it. So they're
Mm.
still exposed to China when it comes to selling to China and all this stuff.
So are they saying like maybe they're selling to like Taiwan and then Taiwan is like shipping it to China?
Exactly. So they found a
Hmm.
way around it basically. I mean,
Interesting.
I don't
Interesting.
know. I don't think I was short Nvidia because of that, honestly. It's like, so what if they're selling it that way? You know what I
I'll be
mean?
I'll be scared to short anything in the
Right.
semiconductor market in this market, boy. I'll be scared. If you are short any of these semiconductor cloud computing
Yeah.
companies, I will pray for you. I'm
Yeah.
praying for you.
This is not the administration to restrict companies to sell to other countries, especially if it's making them money. this is not the administration to be shorting those companies in. Now, if Nvidia does get some sort of restriction and stuff like this might happen. This might cause an issue. But again, how many times Jensen has found himself in this position and he was able to get out of it? You know what I mean? So I don't think I'll short him because of this, honestly. Like this is I think in my opinion, it's not as big of a problem as maybe like the research company is doing, but
Hmm.
we'll see, man.
Yeah, we'll see about that. I'll be spooked, man. I wouldn't be able to sleep.
Especially if you put billions of dollars on this team, man, that's crazy.
I was listening to George Chanos yesterday on what was he on? Was he on Bloomberg or CNBC? One of those shows. And he still has a short position in Tesla. He was like, Tesla is flat over the last 5 years. Tesla's up 100% over the last 5 years. Oh man. So I was
But
like,
that's the thing with some people too. Like they want to die on that hill. They rather than say I'm wrong.
correct.
I'll take my
Correct.
L and move on. My
That's pride.
bad.
That's pride talking.
Right.
That is pride talking.
Just say,
You,
hey, I'm wrong. My bad. Just take your L and move on, man. Like
he is still short Tesla. Ooh, that must hurt.
that must really, really hurt.
That must hurt. Unless you shorted Tesla like maybe recently. If you've been in a short position for the last 5 years, you are getting absolutely smoked right
Mm.
now because Tesla is up over 100%. And it's funny because as he was saying that, CNBC put the chart up behind
Somebody's petty.
and it said Tesla's 5 year performance over 100%. And I was like, sheesh.
Somebody's
You
being petty.
Yeah, somebody being petty or somebody not giving him the right information. Because that's a big like you said the stock was flat, but the difference between flat and 100%, that's a wide gap.
That's a wide gap. That's like a
That's a
whole 180. Like,
that's a
come on.
that's a that's a pretty wide gap. So yeah, I wish you the best with that short position, my boy.
That is crazy, man. Oh my God. Yeah, I'll be sad for that day that he actually admits that he's wrong, you know?
Oh
So
man, yeah. Just sometimes you just gotta just take your L and move
just take
on,
it out,
man.
man. Just take it out instead of trying to die on that hill, be in his deathbed. I'm sitting short. That's like 1,000%. That's
Yeah,
crazy.
yeah.
Oh
That's
man. But let's move on and talk about this great upgrade story, man. I feel like we've been talking about great upgrade utilities, new forms of energy for a while. Now, is there long-term value? Because we've seen some of those like Duke Energy, Oklo, GE, and all this thing like actually like making some really good moves. So let's talk a little bit about that, man, and see like what is the value and is there's really value behind
all right. So let me give you guys my how should I put it? Going down the rabbit hole. So I watch a lot of Bloomberg. Like I watch two things. I watch Bloomberg, actually three things. Bloomberg and CNBC interchangeably and sports. That's pretty much it. I was watching Bloomberg the other day, and the CEO of a company called Flex was on and talking about their business. They had just reported earnings. Let me find the date. They just reported earnings on 5/6. The stock went from 96 to 133 and is now trading at 147. So I looked into the company and they've got different divisions of infrastructure and power and things like that that they tap into. So one thing the CEO mentioned, and you can go watch the interview, it's about 10 minutes and it's on YouTube. But where is my notes on this? Okay. Yeah, she's the CEO of Flex, and she announced a spin-off of their cloud power and infrastructure unit. That spin-off is supposed to happen sometime next year. And I sat there and I was thinking, I said, where have I seen this type of play before? And the light bulb went out. And it was GE. So GE spun off GE Healthcare, and it also spun off GE Vernova. And if you we've talked about GE Vernova over the last couple of years. And GE Vernova, if I'm not mistaken, Yeah, GE Vernova was $115 stock. I guess when it first started trading, it started at $115. GE Vernova is hit a high of $1,181 as of recently. So we're talking about not even, we're talking about less than 2 years? No, a little bit over 2 years. Over 2 years, from $115 to a little bit over $1,181. So Flex, I look at their stock chart and just go look at the monthly chart of Flex. Looks like the chart goes back to about, let me see if I can go back. I looked at 10 years. Okay, so the company's been around for years, years and years and years. And if you just go look at the last 10, this stock has gone from roughly about $14 in 2023 to $147.34. So to me, what I'm thinking is that this company sees potential for creating a separate company because the growth, they're probably expecting a lot of rapid growth in this part of their business. And one of the things that she mentioned was that the infrastructure that we currently have, based on how the grid is built now, is going to need upgrades over time. I think we lost Billy, but let's see if he jumps back on. But we're gonna need upgrades over the next couple of years. So when you think about the upgrades of the grid, I start thinking like, who are the businesses that are gonna benefit from being the picks and shovels to have to upgrade the grid over the next 5, 10, 15 years? Let me give you some data that I picked up that I want to share with everyone. Where are my notes at? All right, so listen to this. The EIA said that US electricity use, which already hit a record in 2025, is expected to rise to 4,248 billion kilowatts in 2026. And in 2027, that number is going to be 4,379 billion kilowatts. So the energy usage and the demand is going to continue to climb. So the grid is going to need to get upgraded. So there are going to be companies that are going to be called upon to have to upgrade the grid. So I started doing uh, some research around those companies and saying, okay, who could be the ones to benefit from this? There's a lot of good names in there that you can do your research on and find out. Then the second thing I wanted to also look at was, as you're building the grid, raw materials that go into building the grid. Steel, copper just hit an all-time high today, right? Copper is going to be needed because it's a electricity conductor. So all of the raw materials that go into building the grid, who are going to be the companies that benefit from stuff like that? Then the last piece of the puzzle of grid upgrades are the utility companies. That's a little bit more tricky because politics is going to play a part in that, where politicians at the state level and the federal level are trying to tell these utility companies that they can't raise rates on their consumers. So are they going to cap rates? Are they going to make these hyperscalers and these people that are using all this energy in the data center, they're going to build them a different type of electricity pricing model? We don't know how that's going to play out. So there's a bull case for the utility companies, and there's also a bear case for the utility companies. So a lot of that to me depends on how the politics play out. But these utility companies, I mean, because of demand, they're gonna have to deliver more power. I think there's potential for them to make more money and to increase more revenue. I will also say utility companies, if interest rates go up, that's not good for them in general. So, those are all the things you got to think about when you're thinking about this long-term investment. But those are just some of the things that I would be thinking about that a lot of people are not thinking about that is going to happen over the next couple of years. Everybody's kind of hyper focused on the memory, the compute, the semiconductors. All of those things are important, but to me, the power story is the bigger story
Biggest
moving
one.
down. They're moving down the road, and SMRs, to me, when they become live and useful, they're going to play a part in that story. So don't forget about that piece of the puzzle as you're looking at all the hype with the semiconductors. Think about utility grid upgrades. Think about the raw materials that are going to be needed for those upgrades, and then think about how utility companies could profit around the demand for more power in the future. So know
Yep.
where you heard it first, but
That
put those
story,
pieces. Yeah,
that story is still intact. Yes.
yep. And if you're in our group, I put together a 7-page investment thesis on this topic. And I think it's worth the read because it's very detailed and it gives you a lot of things to consider as you're making um, your investments. Because what I'm probably going to start doing now is taking some of the profit that I've made from Intel and Oklo, and start looking at where areas where the market hasn't really run too far just yet,
Yep.
and start making those positions for the next 2, 3, 4, 5 years moving forward. So don't just focus on the now. Think about what's coming in the future as
Yep.
well.
And that's where you find opportunity, right? Like you will spend a lot of more times in the beginning figuring those stocks out, but long term, you find some gems in there. And you just
Yep.
have to figure out early before everybody else where the direction the market is going. And I'm telling you guys, like the power story is way bigger than I would think about it. Just think about it. Like if you go back to like the days before maybe like humans figured out how to put oil or how to even to start fire and all this stuff. Once we figure out that we can do those things, and we once we figure out like we need energy to be able to do certain things, we never went back. Right? If we all go in the darkness right now, I guarantee you everybody will freak out. I guarantee you, everybody will freak out. You wouldn't know. We wouldn't even know how to start a fire, how to cook meal. Like a lot of people won't even know how to start fire from scratch. You know what I mean? That's how crazy it is that we depend so much on power. So it is a necessity. And the reason why I'm saying necessity right now for the past, I'm talking about especially in the US, for the past, I don't know, maybe 20, 30 years, we never had to worry about anything happening to the power system because we didn't really have a new technology or something that kind of consume the power outside of just the US consumers, like companies, buildings, street lights, all these different things. We were able to handle it with what we have. But now we're seeing a new addition, a new technology that is needed. And that technology is in direct consumption of the things that we use. So imagine like you and your family are able to eat well with no addition to anybody else. Now imagine another family comes in and now everybody's eating your food in the house. So now you have to be able to try to figure out how to make more food to supply everybody in the house. You know what I mean? So that's basically what's happening. So the power story, like Wale said, man, it is way, way. I don't think we haven't even touched the surface yet, honestly. Like
Yeah.
it's coming. It is coming. And when it
Until
shows up, whew, boy.
until we get data centers in space.
Space, the moon, in the sea somewhere. I don't know.
Yeah.
Um,
Like
but it's
I know they tried data centers underwater, and I don't know if that project went too well.
yeah, yeah. But again, man, like it's gonna be very, very interesting to see where this story ends up going. So and what companies actually gonna benefit from it. But your job right now is to try to figure out what companies are gonna benefit from this long term.
Yep.
So just figure it out.
And I will say this, at least for right now, another thing that you got to think about is did we overbuild for AI?
Mm,
That's another thing you got to think
that's
about.
another thing. Yep.
I think I gave the analogy of like, hosting a party and you cook for 200 people and only 100 people show up,
Mm-hmm.
you know, and that could happen,
That
you
could
know.
happen. Yep.
So we don't know. I mean, everybody has projections of what the demand looks like, and they're trying to lay the foundation based on these projections,
Right.
but you can overshoot. You can also undershoot.
Yeah.
So, you know, keep
All of the
those
possibilities.
all of the possibilities. Keep those things in mind. So, this is that just has potential. You just have to understand it. That just has potential. So, yeah, we'll see where this story goes. Everybody thinks we're in the early innings. Like we haven't even scratched the surface you know, of what the potential of AI can be. But I will always tell people that think outside the box. Like think outside the box because if you think outside the box, that's how you stumble across a BRT. That's how you stumble across an Oklo. That's how you stumble across a Lumentum. What's another one? That's not a name that comes up. Arista Networks, right? Like you look at some of these stocks over the last couple of years, it's like, dang, these things have been moving.
Yeah.
So, you know, keep that in mind.
Yep. Yep. So moving on to economic calendar, man. Tomorrow we have the U.S. retail sales comes out at 8:30 a.m. Initially jobless claim also, and then import price index also all come up at 8:30 a.m. We have a bunch of Feds that's speaking tomorrow. We have Kansas City Fed President Jeff Schmidt, Cleveland Fed President Beth Hammock, yeah. New York President also John Williams, and finally Governor Michael Burr, all speaking tomorrow, starting from 10:15 a.m. all the way to 7 p.m. Friday, we have the industrial production numbers coming up, capacity utilization, and Empire State Manufacturing Survey all coming up on Friday. The following week, not a whole lot. We do have some more Fed speaking. We actually have, is this? Ooh, we have FOMC minutes coming up
Mm,
on Wednesday of next week at 2 p.m.
okay.
So that's gonna be interesting. Let's see what the final FOMC comes on the day of the new Fed actually starting. So we'll see what's happening with that one. But next week there is not a whole lot of economic calendar that we should be expecting. Nothing big, nothing major coming up next week. So with that being said, man, I think we covered a lot of stuff today. Well, any last minute parting words before we close up the night?
The only thing I will say is if you get a chance, watch that 10-minute interview on Bloomberg about Flex announces spinoff of Cloud Power Infrastructure Unit. And there's another video. There's two videos on Bloomberg. I think she appeared on there twice where she talks about the spinoff a little bit more.
Mhm.
Um, Watch that. Listen to that. Listen to that interview, and that will tell you that the grid it needs to be upgraded, and this upgrade is going to happen over time. And there's going to be players that are going to be called upon to make those upgrades, and there's going to be
Yep.
raw materials that are going to be needed. We talked about copper.
Yep.
So just want to leave with those parting words.
Man. So with that being said, man, like you guys keep an eye on some of those stories and some of those use cases that we keep telling you guys. So again, we always advocate for you all to do your own research. We'll give you guys all the breakdowns, but you still have to do your own research. Don't take our words and run out and start buying stuff based on what we said. But this is not a financial advice. This is us just breaking down what we think the market is going, what we think is happening in the market. A lot of times we are right, sometimes we're wrong, but just overall, you got to keep in mind that you have to do your own research. You got to make sure that you are doing your due diligence. And we give you the framework. Wale gave you guys exactly the framework how to break down a market, how to break down a stock like a year ago. If you guys want to go back and watch that, join the group or just ask us. We can probably send you the video. But overall, man, we give you guys the framework on how to break down a company and be able to understand exactly whether this company is viable or not. I'm not just looking at numbers, but actually looking outside of that also. So both fundamental and technical analysis also on top of that. But with that being said, man, you guys stay disciplined, stay informed. Don't get caught chasing headlines. I'm telling you, without understanding the bigger macro picture behind every single move. Make sure you guys understand the collective move and the whole story before you jump in. That being said, man, I'm Billy. Wale with me.